So yesterday, guys, um, we were talking about the monthly. No, no, no. 2 days ago, we spoke about building bias, which is from the monthly dealing range to the daily time frame bias. And today, we're going to be talking about yesterday, 2 days ago, we spoke about monthly dealing range, daily time frame bias, that's building the bias. And yesterday, we spoke about quarter point. Today, we couldn't finish with the daily cycle range concept because of time. So we're going to be diving right into it today. Okay. And I'll be teaching you guys the daily cycle rate concept. And this is all we're going to be looking at today. Let me just pull it out for you guys here. This is all we're going to be looking at today. Um, all right. So today we're going to be looking at my daily range cycle concept. I don't know if this is large enough for you to see. Let me make it into 8. Good. So today we're going to be looking at my daily range cycle concept, and also going to be talking about points of interest, my how I identify points of interest, how I identify momentum, and my entry system. Okay, that's what we're going to be looking at today. And without wasting much time, we're going to be diving right into it. Just get your notes ready, avoid every form of distraction, and pay close attention. This is now where things get a little bit interesting. Now, what is this daily range cycle concept? And I'm going to come back to this. Guys, let me just delete everything. And like I told you guys, we're going to use it in one of the examples that we're going to be talking about in today's session. So, talking about the daily range cycle concept, what is it all about? Why the daily range cycle? And what is it all about? How do you use it? Why did I come about this? Now, many guys trade psychological levels, which you can almost argue that it's the same thing as psychology levels, which I wouldn't really have the strength to have that argument because it's almost the same thing as psychological levels. But then there is a reason and there's an ideology behind the DROC levels. Whenever I use DROC levels, for want of all those things, just know it's daily range cycle levels, okay? So whenever you talk about the daily range cycle levels, what are those levels? Now, if you see on my 1 hour time frame or my 15 minutes time frame, it's plotted here. And the way I plotted it, I made it visible only to 1 hour and 15 minutes. All right. So on the 4 hours chart, you cannot see anything there. All right. It's just a very, very much plain chart on the 4 hours time frame. But once I come to the 1 hour time frame and then the 15 minutes time frame, you see it visible. Okay. I had to set it that way so my chart don't become messy. All right. And I use it majorly for my entries. I use it strategically for my entries and they play a major role. Now, why the daily range cycle concepts? This is how the concept came about. Let me use a 1 hour time frame. Yesterday, we were looking at, sorry. So yesterday, we were looking at quarter point theory and how price travels from one level to another level, right? And I was explaining to you guys that those levels are very, very significant. And every single time you see price break out of one of those major levels or quarter point cycle, you just know that your easiest target is the next cycle. And I explained that. I gave several examples on quarter point, which for the want of time, I wouldn't want to because we have so much to look at today. So for the want of time, I wouldn't want to go back into discussing anything regarding quarter point. But the daily range cycle picks its style from quarter point theory. It was in the course of my studies that I was able to come about that sometime last 2 months ago or so, something like that. And I was discussing with the academy and I told them that, look, I was gathering the data for a particular backtesting session that I was doing, and I saw something very, very, very interesting. And it influenced my trading decisions for good, all right, for very, very much good. Now, this is the idea of a daily range cycle. Let me turn on the session breaks, which is going to separate this for us, and let me make that a little bit more brighter. So what is session breaks? And let me start with them. This session break indicator you see here now is not like an indicator, right? It's just a settings that you can see in your trading view. And one of the things that helps us to identify is the difference between the start of a day and the end of a day. For example, this was every single thing that happened in GBP JPY on Wednesday. All right. So starting from today, Wednesday open and Wednesday close. Now we had Thursday open also. Very soon you're going to see that line for Thursday close. So we had Tuesday price action and the rest of all those things. So every single price action you see here, all right, between these lows or the distance from here to here is every single thing that happened on GJ on Tuesday. Every single thing here is every single thing that happened on Wednesday and Monday and so on and so forth. So when I was studying my concept, this was how the inspiration came to me, okay? I realized that on an average, GBP JPY, if we should take a study from the month of, the month of April is too long. So let's say for the past 2 weeks, I don't want to drag it too long for the want of time. So let's gather a data or a raw data now from the last 2 weeks, which is going to be from last week. This is last week candle, and the week is almost ending, all right? So within last week and today, let's gather a data and see what we would get from here. So we realize that on an average on GBP JPY, now this data you're seeing here, I did not just get it from 2 weeks. Okay, before I could come about the daily range cycle concept, which is the DROC concept, I gathered at least a year data from it. I took my time to gather enough data to back up this particular fact. All right. And I invested when it comes to study. There's one thing that I'm very good in. If it studies, I study. I'm good in study, and I don't want to. I can make a little boast on it, anyways. But I really do invest time. Whenever I say I want to backtest and gather studies or gather data, probably any other day in the future, I can teach you guys how to backtest and do all those things. But whenever I dedicate myself for a backtesting study, I invest so much time gathering data, and I know how to gather data properly. So in the gathering of these data, I realized that on GBP JPY, from the lowest price from the lowest price of the day to the highest price of the day is usually an average of 100 pips move. For example, this was Monday 2 weeks ago. If you look all above here, you will see this is 127.3. All right. And looking at that 127.3p, that's 127 pips in a day. On Tuesday, how many pips did they deliver? From the lows to the highest points we got price on that Tuesday, we saw that price delivered about 250 pips move, right? On Wednesday, from the lowest point we got price action, which was that lowest point there, till this was the highest point on Wednesday. This one is on Thursday. So this was the highest point. That is about 100 pips move for Wednesday. And if you continue taking the data like that, this was the highest point price got to, all right, on Thursday. And this was the lowest price here. Look at it here, somewhere there. All right, this is about a 202 pips move, and so on and so. If you just, in short, you know what, in your free time, go ahead to gather that data yourself for the ones of time. You'd realize that on an average, GBP JPY delivers 100 pips on a daily basis. There are days they deliver up to 300 pips. There are days they deliver up to 250 pips. There are days they deliver up to 150 pips, sometimes even 500 pips. All right. But then on an average and on a very bad day, you're going to see the GBP JPY play with the 100 pips. Like they deliver at least 100 pips move on a day from the lowest price, points that from the lowest points where price got to the highest points that price got to, will usually be 100 pips move. Usually be 100 pips move. So this became the daily range cycle for me. And that was how the name came, daily range cycle move. So GBP JPY moves in a cycle of 100 pips move. That is just every single thing you need to know about the daily range cycle. As simple as that. It's very simple, straightforward. And like I taught you guys, when plotting quarter point levels, I told you that when you want to plot these levels, you want to find that nearest whole number to plot the levels, right? So for example, in this particular case, I'll have the 195 levels is the most visible one. So if you look at the right-hand side there, you're going to see it's the 195. If you want to look at those whole numbers, now we are plotting the daily range cycles. Remember, quarter point levels, we plot it on the weekly time frame. But when it comes to daily range cycles, we plot it on the 1 hour time frame. All right. So this is it on the 1 hour time frame. This is your 195. 100 pips from 195 is going to give us what? 194. Okay. 194 levels. And after that 194 levels, another level you're going to have is going to be your 193. Now you realize that the distance, so you realize that the distance between 193 to 194 is 100 pips. If you put the tool just from here to here, you realize that that's about 100 pips. Same thing about the same thing here, right? So you can go ahead in your chart to plot this 100 pips daily range cycle. Now, this is the ideology that once you can get a good trade, and if you can see, those spikes serves as a very good turning point, just as you have with your quarter point levels that I taught you guys, right? I told that quarter point levels play very, very much significant roles when it comes to identifying those zones where price wants to take. But those ones now is for a higher time frame application, okay? So for a daily time frame day-to-day trade that we want to see ourselves taking, you usually see price move on a GBP JPY on a 100 pip cycle on a day-to-day basis. So every single day, you're pretty much sure that at least, even if the day is very much bad, you can get 100 pips. And that was now what led to the plotting of all these levels that you see here now. That was how I plotted all these levels. So I had to plot them from the top to the bottom because I know that I'm going to be using them very much well. And can you see how price have been interacting beautifully? Look at it from these levels. You know that once you get a break above that level, the next 100 pips is your easiest target. Now, if you think 100 pips is a very small thing, go and try trading Euro USD and wait for a 100 pips move. 100 pips move is a very, very big stuff. All right. It's a big deal if you know how to utilize your risk management. All right. So having known that GBP JPY, just like a cycle, what the cycle means is this, just as we have a cycle, it means that if price wants to buy and they take off from this level, you can be rest assured that they will come to this level. And from this cycle, another cycle, 100 pips, another cycle, 100 pips, another cycle, 100 pips. If they break this cycle, you are rest assured that they're going to come to at least this cycle for target, this cycle for target, and the remaining cycle for target. So they move in a 100 pip cycle. And that is one thing that you want to know. That is what daily range cycle move means. Sorry. Now, in all the JPY, XSS JPY pairs, from the data I was able to gather from them, I'd realized that all the XSS JPY move in the 100 pip cycles. They deliver at least on an average 100 pips move day to day. Okay? But when it comes to GBP USD, all right, sorry about that. I have to attend to something. So when it comes to GBP USD, just a moment, guys. Okay, so I'm done. Sorry about that. When it comes to GBP USD delivers on an average of 50 pips on a day-to-day basis. 50 pips. Now remember, GBP JPY and all the XSS JPY delivers 100 pips on a day-to-day basis. GBP USD delivers 50 pips on a day-to-day basis. All right, an average of about 50 pips. If you look at from here, the lowest point yesterday to the highest point is about a 72 pips move. But on a very bad day, you're going to get about a 50 pips move on GBP USD. Now, I don't trade GBP USD, but I had one very beautiful hack for GBP USD. And I don't want to confuse you guys. I would have quickly rushed into it. I had one very beautiful hack on GBP USD, which I might as well consider using very soon again when I'm ready to trade GBP USD. Maybe if I have somebody who trades actively GBP USD, I don't mind having a session with the person. All right, and explaining to the person how to do it. Now, I always emphasize on the importance of selecting a very few assets and focusing on them. I love the GBP JPY. That was why I needed it because they move very well. GBP USD, I don't have the strength for all these very slow price movements, but then they also move also, you get? So, GBP USD range cycle, if you have to plot it on GBP USD, is about a 50 pips move. If you have to plot it on Euro USD, is about a 50 pips move. If you are to plot it on gold, you are going to use 200 pips move. Gold can deliver without stress. Like gold ranged for the day, they will give you 200 pips move. That they had a very bad day on gold, you usually see 200 pips move on gold. But on GJ, UJ, EJ, and CAD JPY, 100 pips move. On every single thing majors, you have 50 pips move. On anything NZD and CHF that have CHF to do with it and NZD, maybe NZD CHF together, 30 pips move on a daily basis. Those guys can be very slow, or especially that USD CHF pair or USD card, they can be very slow. So just use 30 pips range for those ones. Okay. So that is it with our daily range cycle. You can go ahead to plot it, and that will bring us to the end of the daily range cycle concept. So now let's talk about points of interest and my entry system. Then afterwards, I will talk about momentum. Or before I get to my entry system, let me talk about momentum. Okay. So let me remove this indicator. Please, to be sure, before I proceed, to be sure that you guys understood what I just said regarding the daily range cycle, drop some ones on the chat box. If you understand what I just said about the daily range cycles and it's clear, drop some ones on the chat box. If it's confusing, drop some 222s. Let me take questions. I will address that part. It says it's confusing. All right. I will tell you, iPhone, you're going to, or I will allow you to unmute yourself now, so you can ask your question, and then let me clarify you on that so we can proceed. Because once we start talking about entries and you don't really get to understand this, it's going to be, it's going to be challenging. So I'm just seeing a very few response. I want to believe that the very few are talking or saying the same thing that every one of us have in mind. Okay, that they all understand. That only one person is having a little bit confusion on it. Okay, so I've given you the permission to unmute. You said that you're having a little bit challenge, so you can unmute yourself and ask your question. Let me address that now, so we can go right into entries. I don't know whose tag is iPhone. You wrote confusing. I've given you the permission to unmute your mic, so kindly unmute and ask your questions. If you don't have a question, then we'll just proceed. Okay. You're in a bus. Okay. So I was saying that in plotting the daily range cycle, what price does here is that there is a pattern with which price movement happens, and with sorry, just a moment. So there's a pattern with which price moves on a day-to-day basis. And assets on GBP JPY, for example, deliver on an average of about 100 pips move. All right. So all you want to do, just as we spoke about the quarter points yesterday, identify those whole numbers. For example, here you have 195, 194, 193 on GBP JPY. Plot those levels and look for 100 pips distance from those particular levels. When you find the 100 pips distance, you get something like this. All right. You get something like these lines on your chart. Like here now is 195. From 195, you have 196, 196, you have 194, and so on and so forth. So the distance between these two levels is 100 pips move. That is what form our daily range cycle. Our daily range cycle. All right. So the ideology is that price moves in a 100 pips cycle whenever they want to move on GBP JPY. All right. And other XSS JPY pairs. If it is GBP USD, it's about a 50 pips move. If it is gold, you talk about 200 pips move on 200 pips is the daily range cycle move. All right, so the daily range cycle of gold is 200 pips move. The daily range cycle of Euro USD, GBP USD, AUD USD is 50 pips move. For XSS JPYs, all the XSS JPYs is 100 pips move. Okay, so having said that, we'll go right into the charts now to now begin to study the next thing that we have here, which is going to be momentum and points of interest. So let me Let me delete this. Okay. So speaking about momentum, just as the name is, okay, momentum talks about the strength and the volume of a particular price movement or a particular asset relating to Forex markets now, okay? So momentum talks about volume, momentum talks about strength of movement. And this is the summary of what you should understand about momentum, is that in momentum, price in a bullish case, we always have a very strong momentum to the upside compared to the retracement. All right, compared to the retracement, you see the retracement doing stuff like this, and momentum will kick in. This is how you measure where momentum is in the market. Number one is this: you observe that the distance taken for price to move from here to here, or the time taken from price to move from here to here, is shorter than the time taken for price to move from here to here. And majority of the times when this retracement move starts, you might see momentum kicking as the sellers comes into the market. All of a sudden, momentum will begin to slow down, and a heavy momentum in the opposite direction, telling you that the buyers are now in charge. So momentum helps us measure who has dominance in the markets per time. And if the buyers have dominance in the market per time, you don't want to find yourself, right, selling the market. If the sellers have dominance per time in the market, you don't want to have yourself buying the market at that particular point. Now, how do you know when the buyers are in the market or when the sellers are in the market? One of the ways to know that is that you will see price. Just a moment, please. Just a moment, guys. All right. Sorry about that, guys. So, as I was saying, one of the ways to measure the momentum is that you would see that majority of the times, or how to know, I said that momentum help us know who is in charge and also the directional bias that is more dominant. So if the bullish bias is more dominant, you usually see momentum to the bullish side more than the bearish. And if the buyers are much in the market, it will print in the candlestick charts as you see here. Now let's take a study from this particular point or these lows or every single thing the price has done within these lows and between these lows and these highs. Now, this is what you're going to notice is that every single time, or let's study here, you notice that obviously the buyers are more in charge here in the market. All right. And how did you know that? Look at all the candlesticks. The time taken for price. Let me mark out these lows. Let me mark out these lows. And let me the highs of this current price action. Now, that will not be the best thing that I want to use, but let me see if I can find any other one interesting points of interest. Let me see if I can find any other interesting point of interest. That one is very good, but I want to use something very simple to illustrate. Okay, now this is nice. Let me use this. All right, look at this. Look at these lows, exactly these lows, and take a look at these highs, which is exactly these highs. Now, check the time taken for price to move from here all the way to these highs. It took price a day and 8 hours for price to move all the way to these highs. About 1 day and 8 hours for price to get all the way to these highs. But when the retracement began, it took them about how many days? It took them 4 days and 21 hours for them to retrace all the way to the downside. And this alone is a revelation or an understanding that, look, the buyers have more strength compared to the sellers. Because even when the sellers changed momentum or came into the market here, and was causing the retracement to happen, we began to see here that momentum began to slow down. It began to slow down. It began to slow down. And all of a sudden, the buyers appeared here, showing that they are back into the market. And it is time to change the momentum for the sellers to now favor the buyers. All right, we saw how the sellers, yes, we got this buy push here telling us that the buyers are in the market. And then we began to get some retracement move all the way down here. All right, all the way down here. They started getting all the way here, and momentum began to slow down. All of a sudden, the buyers took in, telling you that the sellers' momentum are now very weak, and that led to a new price movement all the way to the upside. So that is one of the ways to know who is in control in the market. Is it the buyers or is it the sellers who are in control? Another way again to notice is by the candlesticks that present here. You usually notice that when the buyers are in the market, the selling candles will usually come in very, very small shapes or small pressures. Like you see, several plenty buying candle, one very small selling candle. That means not enough selling pressure. Then more buying candle, small selling candle, more buying candle, small selling candle. And you can see all these selling candle. It took about how many hours? 3 hours to just sell from here to here, and 1 hour to clear the whole of all these candles, showing you that the buyers are still heavy in the market. All of a sudden, that was now where we now saw that the sellers kicked into the market. All right. And each time the buyers now try to resume their push, look at how weak the buyers were and heavy sellers came in. All right. When they try, you will get heavy sell, weak buy, heavy sell, weak buys, heavy sell, weak buys, telling you that the retracement now or the strength of the market is actually favoring the sellers, and market want to at least continue retracing till the sellers get exhausted and we now begin to see momentum kick to the upside. That is now when you now want to start looking for change of direction and change of bias in the market. Okay. So if you look more again to the current price action, which we have here, see when this retracement was happening. All right. We got all these retracements. You can see this expansion here, how pretty much easy the expansion was and all the buyers that was present. But immediately the retracement started, you can see the war here. Now, more sellers, little buyers, more sellers, little buyers, heavy sellers. The buying pressure was weak. It was getting weak, but then the selling pressure at the same time. We got momentum kicking to the market here, but they did not get enough response from the buyers to support that until we got this momentum here. This momentum began to lead us to this particular move all the way to the upside. All right. And the sellers came in again, and just like that, you can also see here when the sellers started coming in, the buyers' momentum kicked right into this point. All right. Momentum slowed down, led to a retracement, and momentum came into the market, telling you that, look, the buyers are heavy currently in the market. Now, we don't just wake up and trade momentum just like that. Now, there is a way we use momentum to identify points of interest. But for the want of time, or I'm going to address that also in this class. Now, one of the important things you want to know about momentum is this. There are 3 major types of candlesticks that form in the market generally. 3. In short, these 3 candlesticks summarizes every single candlestick you have in the market out there. And the 3 of them are like this. You have what I call a power candle. Now, that power candle, we have a very big body and, a normal wick to the up and to the downside. Then you have what happened here is that if this candle is a bullish candle, you just know that, okay, yes, there are strong buyers present in this particular candle. All right. Or if it is a bearish candle, there are strong sellers. Then you have the second candle, which is called an indecision candle. All right. This indecision candle is that you see a candle with a very small body and a very long wick to the opposite side. All right. Up and down, telling you that at some point, sellers came into this market, but then buyers pushed it back up, and buyers came into this particular candle and sellers pushed it down. So there was tons of indecision in the market. All right. And then the last one is what we call a rejection candle, which can be presented in 2 forms. All right. Rejection to the downside, showing you that the buyers came into the market, but the sellers pushed price all the way down. All right. Can have maybe a little wick here and something like this, telling you that, okay, the sellers at some point came into the market, but buyers pushed price all the way back to the top. This is the summary of the 3 types of candles that present in every single market situations. Okay. So if you study price action and look at all the candlesticks here, you can categorize them into that 3. All right, if we should take, let's say from, let's study all that happened here now, you realize that this is an indecision candle, for example. All these other candles are power candles, right? Strong power candles, right? Very strong power candles. This is an example of a rejection candle right here, where you saw price, the sellers came in and then but price pushed them all the way up. This is an example of an indecision candle. So in all the candles, they can be categorized into one of these three candlesticks pattern. Now, when trading momentum, what you have to understand is this. An indecision candle, or the last indecision candle that's present before a strong momentum, is usually a very good point of interest. So, just a moment, sorry. The last indecision candle, emphasis on indecision candle is usually very strong. Now, it's that indecision candle play or point of interest is usually what we call support and or supply and demand zone, or they are typically what they call a supply and demand zone. Like I told you guys, I trade support and resistance, but I'm using this momentum to teach you something. I'm going to come into my entry system and my entry model shortly, and but I need you to understand this because it's also going to guide us to refine a little thing here and there. Okay, but then you realize that, look at this bullish momentum push. What was the last indecision candle that led to that push? Can you see this indecision candle here? I told you just right now what an indecision candle, right, is, and that is what they usually call your demand and supply zone. Those zones usually serve as your point of interest to take price all the way to the upside. If you look at every other retracement you can think of or you can see, for example, look at this one also. Can you see an indecision candle here? That was exactly the point of interest that led to this move. If you come all the way down here also, you will see some other movements right here. The last indecision candle before this expansion move or this explosive move to the upside is this. This was the last indecision candle before we got the explosive move. This is a rejection candle, not an indecision candle. All right. But yes, price did not tap right into that zone, and we got that bullish price action to the upside. If you go back to chart and search for those levels, you will see how they play a major role when it comes to identifying points of interest. But now we don't just use these points of interest like that. Okay. I don't trade. If you want to trade supply and demand, you can just use that off. Okay, you can just trade off that information, no problem. But then there is a reason I had to teach you guys this. Now, let's dive right into our entry model. Let's now dive right into our entry model and how we enter trades and why we enter trades. So, momentum, like I said, just a quick recap and then we go there. Let me give a journey now on how the analysis will run. You've done your monthly time frame dealing range analysis. You've built your bias on a daily time frame, and let's say your bias is bullish. And you've gone to your quarter point and you've confirmed that, okay, based on bullish bias, this is the next easy quarter point target I can have, or a particular place where price can retrace to for me to have my re-entry to now take my trade. The next thing you want to do is to come down to the 4 hours time frame or the 1 hour time frame, preferably the 4 hours time frame, and identify who is in charge in the market at that particular point. Now, what that is going to help you identify is this. You want to know in a bullish market structure, like I told you guys yesterday, price is always expanding, retracement, expanding, retracement, and expanding. All right, expanding, retracing, expanding, retracing. Okay, so you want to know, in so much that our bias is bullish, are the buyers the ones in charge of the market now? If they are the ones in charge of the market based on momentum, you want to be looking for only buying opportunities. If it is that, okay, yes, we are bullish, but the sellers are in charge to give us that retracement, you want to be finding only selling opportunities, emphasis on short-term selling opportunities, only just short-term selling opportunities, knowing that, okay, we are still bullish, but we are just selling to a particular point of interest for a retracement to happen, and then we'll start going back to the upside. Okay, that is why I had to use momentum in this particular case. Momentum will guide us to know when exhaustion is coming into the market, and we can now begin to expect some retracement because sellers are kicking in. And it will also tell us that exhaustion has come into the market and the sellers are getting exhausted. It's time for the buyers to come in by a visible momentum candlestick or a visible momentum move. And then you now know that, okay, now sellers are exhausted. It's now time to resume bullish price action. So once you do that, the next thing you now want to identify is come down to your lower time frame and now begin to use these entry techniques I'm about to teach you to enter your trades. You use these entry techniques I'm about to teach you to enter your trades. And like me, I love using a static risk to reward, which is usually 1 to 3 risk to reward. But depending on what I'm looking at, I can either take a 1 to 2 risk to reward or a 1 to 3 risk to reward. Now, the system I'm going to be showing you is going to favor the both of them. If you're a 1 to 7 risk to reward trader, all good for you. If your heart can accommodate, the ups and downs of the market and all those retracements, fine. But I love static risk to reward, which is 1 to 3 risk to reward max. So once it's 1 to 3, I'm out of the market. I let the 1 to 4, 5, 6 is none of my business. There are days that after taking 1 to 2, like 2 days ago, right? You saw that 1 to 2 trade and price went ahead to give a 1 to 8. I tried keeping my trading realistic. And once I know that I can easily get 1 to 3 in the market, all right, I'm good to go. So now, see, another important thing about my trading concepts, using the daily range cycle concept, which is the DROC concept, is that based on the DROC concept, all right, based on the DROC concept, this is what you should know. Okay, GBP JPY move on a 100 pip cycle range. Okay, they move in 100 pip cycle. Now, this is how I now use this. I know that any trade I use and the SL is about 30 pips. Let me say I enter a particular trade from here within this particular daily cycle range, this particular daily cycle range with 30 pips SL. 30 pips SL is somewhere around here, which is good enough to give the market time to breathe. I know that at least this daily range cycle, a little bit above it, is already a quick 1 to 2 risks to reward. All right. Or if I enter exactly from one daily range cycle level like this one here, 30 pips SL, the next daily range cycle is already a 1 to 3 risks to reward. Can you see that? And it is very almost obvious that price will give you that next range. That once price is taken off from a particular range, you just know that the next range is where we're going to see price get to. Now, I told you guys that I'm going to use the trade I shared with the community. That is today's trade that I shared with you guys that we're going to use for studies in this particular session, right? And as we're going into studying that, I will now explain to you why I was able to, I will explain to you why I was able to see this. This is the trade right here, right? I will explain to you why I was able to take this quick 1 to 2 risk reward, which was a very, very much simple and straightforward easy money trade. Can you see price had already broken past these levels, which is a 100 pip cycle range, all right? And immediately broke past these levels, I was already beginning to see the evidence I like seeing form right into this particular point. I took my entry. SL is always usually 30 pips SL, all right? I took my entry, 30 pips SL, and a quick 1 to 2 because I know that GBP JPY moves on an average of 100 pips. So when they broke past this level, I know that this level is the easiest next target. I could have put my SL there, but that would have been giving me a 1 to 1.7 risk to reward. So I really wanted that 1 to 2 risk to reward. And at least I know that a little bit above that is easily achievable, even if they don't want, because it's not all the time that price will react. It's not picture perfect. That's okay, because it's 100 pip cycle, the price will touch that line exactly and start going down. No, that is not how it works. Like, for example, every single time they come, you usually see a little bit push above it for a retracement or a continuation, anything like that. Okay, so I saw that opportunity. I saw exactly what I want to see based on my entry model, and I took that trade, 30 pips SL. I know that we are journeying from this level to this level. The bias is bullish. I'm looking for only bullish bias. Momentum, the buyers that's come into the market, so the momentum is owned by the buyers now because they've given the evidence that, look, I'm now into the market, and we broke past one particular level. And just like a quarter point theory session works, or just like a quarter point theory, once price break past one level, you are almost rest assured that they are hitting the next level. It's an easy target. So between this level to this level, I should be able to find my entry model and take trade into that levels. That is exactly how I got that trade. Even if I don't want to take trade to that levels, I can as well hold it onto the next level. So if I get the trade here, I can quickly exit at these levels or hold it onto these next levels, or preferably 50% of that particular range. And that is exactly how I trade. So getting a 1 to 2 risk reward is almost very easy. That is why I always call my 1 to 2 risk reward trade an easy money trade, because once it is spotted, now bias is bullish. If we do a monthly time frame, daily range, daily time frame bias, you are going to see actually that the bias is bullish. Okay, now that the bias is bullish, the next thing that I want to now know is who is in the market. And as you can see here, bullish momentum has kicked in, telling you that the buyers are already into the market. So, and once the buyers come into the market, it's an easy story that price is telling. That I know that price can move from here to the next level. So having known that, based on my daily cycle range concept, I know where I can potentially wait for my entries, and I know where I can potentially wait for my exit. It's as simple as that. Okay? So having said that, what are those evidence that I wait out, that I used to wait for? And where do I wait for this evidence? That is now what we want to go into. So now we're going to my entry model proper. What are those entry evidence that I want to wait for? What is that particular pattern I want to see form? Where do I want to see it form? And how do I engage in it? Okay? So let's dive right into that. And we'll begin to take examples from there. And then by tomorrow, we'll now put it all together. Okay? By tomorrow, are you serious? Time is fast spent, though. That was very, very fast. Okay. So, and we're not supposed to go beyond 10 p.m. So let's quickly run through this. All right. So this is my entry techniques. All right. This PDF document, I shared it with the family, and that is my trading community. They have it and we use it very well. My entry technique is simple and is straightforward. Okay. So as you can see here, my entry techniques. Now, these are the evidence I like waiting for. The evidence I wait for are as follows: the evening star and the morning star candle evidence. All right. Now, evening star and morning star are the same concept. It's just that evening star is when I want to look for a selling bias, and bearish star, I say bearish star. Morning star is when I'm looking to buy. Evening star is when I'm looking to sell. The morning star is when I'm looking to buy. So they are the same thing. Then you have the bullish and the bearish engulfing. The bullish engulfing when I'm looking to buy, and the bearish engulfing when I'm looking to sell. These are the major two I use for now. Let's leave the rising tree method candlestick and the falling tree. They are used for continuation moves, but I cannot go into continuation moves now. All right, so but we'll just focus on these two. If you look at all the entries I've been posting, you can go back to chart and study, and you will see that all my entries are based on engulfing candle or the evening or the morning star candles. Okay, now these are the rules that guide us. Now, before we go to the rules, I would like to state that these patterns have variations. They will not be picture perfect. The way you saw it presented now in this chart, or the way they look now, is looking very sweet, but they have variations. They will present in different variations because the market will not make it easy for you to identify. The market will never make it easy for you to identify, but they appear all the time. So understanding the rules guiding their presentation will help you to utilize it properly. The patterns will not be picture perfect in your chart. So they will appear in different forms. But when you understand the rules, why the pattern form, or this particular candlestick patterns form, then you'll be able to utilize them. So having said that now, this is the evening star. This is the rule that guides the evening star or the morning star concept. It's usually a 3 candlestick formation pattern where you have a first candle that has a wick to the upside and a wick to the downside. It mustn't necessarily have a wick to the upside on the downside. It mustn't have it. But then the first candle is a power candle. The second candle is an indecision candle. The second candle always has to be an indecision candle. That is that candle with a wick to the up and to the downside, but with a very small body. The body has to be small and a wick to the up and to the downside. And another rule guiding this is this, that the middle candle must be smaller than the first candle. the middle candle must always be smaller than the first candle. Now, the third candle must close below the 50% of the first candle. If it doesn't close below the 50% of the first candle, that is not an evening star or a morning star. That is the ideology behind evening or morning star concept, all right? That the first candle is a power candle, second candle an indecision candle, and the second candle is always smaller than the first candle, and the third candle must close at least 50%, beyond 50% of the first candle. Same thing here with the morning star, right? A bullish engulfing is just that you have a bearish candle and then a bullish candle that closes way above it, all right? Or that engulf the previous candle. These are the candlestick patterns that I focus on when looking to take a trade. Now, this is exactly how I now utilize them when taking a trade. Okay? Now, quarter point levels, what to expect at my daily range, or are the candles, the best candles to wait for. Now, what are quarter point? These quarter point levels, or let me say quarter points, or, sorry. So quarter point, or, I don't think I can edit here now, it's locked, okay? So we have the quarter point, or the DROC. Best will be the DROC levels, which is the daily range cycle levels. I should have used daily range cycle levels here, not quarter point levels. So daily range cycle levels is what's supposed to be here. What to expect and the best candles. So if price comes to the 0.00 level of my daily range cycle, for example, let's say you have this. All right. For example, let's say you have this. The 100 pip cycle range on GBP JPY is from these lows to these highs. Let's say that is the 100 pips range, right? My quarter point is telling me that if price is at the 00 level, 00 level is these levels and these levels, that is 00 levels, or the 0.500, which is the 50% of the level, 50% of my daily cycle range level, which is these highs and these lows. If price is either here or at the 50%, and I'm expecting either, okay, if price is either here or there, these are the two things to expect. I should expect either a major reversal to happen or a continuation. So if I am bullish, all right, and I want to enter continuations, I can enter from any of all these levels or the 50% for my entries. The best candlestick to wait for, all right, the best candlesticks to wait for are evening star concept, morning star concept, bullish engulfing, and bearish engulfing. All right. In a bullish case, I want to wait for morning star and bullish engulfing. In a bearish case, or bullish engulfing rather. In a bearish case, I want to wait for evening star or bearish engulfing. In this other fib levels, which is the 0.250 levels and the 0.750 levels, they are majorly used for intraday bounces or traps. And these are the candlesticks we want to wait for, all right? But in the course of this class, because of time, I'm not going to talk about these levels. I will just leave it for another day. I will not talk about these levels. The main levels I want to talk about is these levels and these levels. That's what we are going to discuss today. So just take notice that at the 0.00 level and the 0.500 level, which is the 50%, for a major reversal, sorry. So for a major reversal or continuation, these are the candlesticks I want to experience, all right, or I want to wait for. After a break and support and resistance zone, after a break of a support and resistance zone, let's say I'm looking to sell the market and there is support and resistance in this particular zone, and price breaks above it, and I'm expecting that retracement to sell, what I want to wait for is an evening star concept, all right? If it is in a buying case, what I want to wait for is the morning star concept. These rules are very much important, okay? So we're going to go into the chart now to begin to study these things, okay? And then we'll call it a day. We'll go into the chart quickly to study these things and we'll call it a day. So we're going to study for after a break and a resistance zone, and we are waiting for reversal, evening star or a morning star, at 0.00 and the 500 levels, either a reversal or a continuation, this is what we want to see. So now let me show you why I took the trade that I took today, okay? So, as you can see in this chart, we were bullish. Let me bring out that image again. Let me see if I can have that image again. Yeah, good. You can see price is bullish. So I'm trying to explain why I took this now, right? We are bullish. Price has broken. Now remember that at each of these levels, just as I taught you guys yesterday, based on the quarter point, each of these levels serves as support and resistance also. And inside of those support and resistance, you can also find some other extra support and resistance, like you can see here. So many support and resistance levels. I'm sorry that I omitted support and resistance in the course concept because I'm supposed to teach you guys support and resistance, but you can just read about it. It's not a difficult thing, okay? So this is support and resistance right here also. So I marked out this range and I marked out my fibs from this particular lows to this particular highs. Now you realize that these are the 000 fib levels from these lows and these highs at the 00 fib levels. This red line is the 50% of that particular zone, okay? And then these orange lines are the 250 and the 270 fib levels, which is a quarter point level of that. So these fibs is plotted based on the quarter point concept, okay? So we were bullish. I wanted to take a trade right from here, okay? By the time I saw price action, this was early in the morning. So this was somewhere around 7 a.m. in the morning. You want to look for bullish price action. I did not see any of all this candlestick pattern presented here. So I didn't have the confidence in taking that. And then there was a news release by 1:30. I didn't want to enter before that news. So I said, okay, trading post the news will be better because you can actually find, like you can see here, there are some engulfing pattern candles right here. If you look into this point, there are engulfing candles here. And if I had taken that, the news would have stopped me out and still eventually go my way. So I said, I will save myself to trade post the news. That's after the news. Now, after the news, this was what we got. This was the engulfing candle we got. Can you see this bearish candle and then this bullish candle? A very, very simple stuff, right? This was that bearish candle, this red bearish candle, and a bullish candle that engulfed the bearish candle. So immediately after that engulfing, I waited for price back at these levels, all right, 50% fib levels. SL will always be 30 pips, which was somewhere around there, and target was a quick 1 to 2. I knew that at least price should come into this next level, which was a 1 to 7 risk to reward. So I had to now go for a quick 1 to 2. And price eventually went to give us what? A 1 to 3 risk to reward overall. And that was a very simple trade setup. Sorry, guys. Can you guys hear me now? Oh, please, somebody should confirm. Can you guys hear me? All right. Sorry, please. I don't know if my network went out. I just saw that the network bar was low. So you can see how bias was bullish. I saw the engulfing candle. Thank you for the confirmation, guys. I saw the engulfing candle, and that was my confirmation to engage in the trade. Let me show you guys another one again from our community that one of the trades I posted yesterday. Was it yesterday or 2 days ago? As I told you, was another easy money trade, which was this. You remember this particular trade? I will tell you why I also took this trade. Now, this was it. You can see where the entry is. We'll go down to the chart now and study. Which asset was this again? USD 1 hour time frame. So let's go to USD 1 hour time frame. So now this was the USD 1 hour time frame. Okay. Immediately I saw price coming to this particular point. We were bullish, no doubt. Bias is bullish. But then I saw exhaustion began to come into the market. All right. There was already an exhaustion. And there was a support and resistance zone here. Can you see all those support and resistance even in this level. I told you that all these levels also serve as support and resistance. Now, after a support and resistance break, what will you expect if the market give you this? This is, remember this PDF. After a support and resistance zone break, and we're expecting a reversal, you want to wait for an evening star. In this particular case now, for a selling case, price broke above that support and resistance, which this my daily cycle range also serve as a support and resistance, and you can see other candlestick confirmations within that zone. Immediately price broke above it. Can you see an evening star candlestick presentation? This was it here. Let me mark it out. That is it. An evening star candlestick presentation. Now let's study that candle, the anatomy of that candle. I told you what that thing is, right? First candle, a power candle. Second candle, an indecision candle. Third candle must close at least 50% below the first candle, which was a very, very good evidence. All right. Immediately we got that close. I waited patiently for price. You know, I would have ideally entered from here with SL above here, but there is a reason why I had to wait for here. Now, even if you had entered there, you would have still been in profit. So I just said, okay, fine, let me refine my entry all the way to this particular highs, SL above that highs. And do you know where my target is going to be? We had the break above these levels. Okay, so that means typically we are still dancing with these levels. Now, with this evidence, I know that 100 pips daily range cycle concept tells me that I should wait for price at this next level. This was a 1 to 6 risk reward. And that was exactly how this trade came about. This, can you see it? Evening star, waited for the evidence, executed sell above that high, and my next daily range cycle is for my target. 1 to 6 risk reward. So you realize how I am actively trading from one zone to another zone. But what guide my entries are these rules. Is that when I'm expecting a reversal and there is a break and support zone, before I engage in that trade, I must see either an evening or a morning star candlestick. If it's a continuation, then I can now, or any other thing, I can talk about the bullish and the bearish engulfing. If you go to the chart and study all my previous chart examples, you will see that all my entries are usually based on the evening, the morning star, the bullish or the bearish engulfing candle. All right. And for the want of time, we might not be able to take as much examples as we should because it's already after 10 and it's past 1 hour of the class already. So I just used only 2 trade examples I used or that I took. But let us also look at this. All right. Can you see something here? Let's say you took a trade here. Can you see this? One more example. Let's say we are already in a bearish case because we're in a bearish environment. Price came to retest this particular daily cycle range levels, which is these DROC levels. And they gave you what appeared to be an engulfing candle, which is a bearish engulfing, where this bearish candle engulfed this particular candle. SL right at the close of that engulfing candle. Entry right there, SL at the highs. And you know your next target is going to be the next level. All right. And even if you wanted to hold for a 1 to 2 risk reward, this would have been where your 1 to 2 risk reward came all the way to. Now, the beautiful thing about this trade setup is that when I'm doing an analysis, or the reason why I love my system is that when I'm doing an analysis, I can easily time my entry. I can just tell myself, okay, I am waiting for a 1 hour candlestick close. Like this is a 1 hour time frame now. That before I engage in a trade, I want to see how the next 1 hour candlestick is going to close. In the case of an evening star, right? It has 3 candlesticks, which is the first candlestick, the middle candlestick, and the third candlestick. So that means about 3 candlesticks that have to form before I engage. On a 1 hour time frame, that means 3 hours have to go. In that particular case, that 3 hours I can be off chart. If it's around 9 o'clock, I can be off chart around 9 o'clock and return back to the chart around 12 o'clock to see if my evening star has completed. If it has not completed, I ignore that trade. If it is on the 15 minutes time frame, I wait for 45 minutes window to pass. If in the next 45 minutes an evening star did not present, or in the next 30 minutes a bullish engulfing or a bearish engulfing did not present, then there's no trade for me regarding my points of interest. I just showed you what my daily range cycle concept is all about. And I've explained to you the evidences I wait for based on my bias and how I use them and interpret them. It's going to make much sense when we put it all together. All right. And in the putting it all together session, we're going to do it like a backtesting session. So tomorrow is our grand finale. And what we're going to be doing is putting it all together. We're now going to look at from monthly time frame bias, daily time frame trading range, aligning it with our quarter points, using also the concept of momentum and our points of interest and our daily range cycle and applying the entries. And what we are going to do tomorrow is that we're going to study at least 2 assets. Let me say, maybe we'll use one of the JPY assets, either USD JPY or GBP JPY, and we'll use GBP USD. And maybe we'll now use gold for all the gold and BTC traders. All these things works on all assets. This concept works on every asset. And you can use this concept for easy target, easy day-to-day reward. When these things doesn't present, you should not be found taking your trades. Now, anywhere you go back in charts, if I should begin to go back in charts to begin to find other examples of trades I took, you realize that all the trades were based on that. Look at this trade here also. Lastly, before we now call it a day, if you look at this trade here, you will see something. Let me show you now also why I took this trade. And I'm going to send the before. Okay, this was the before of the trade, or this is the after rather. I will show you why I took this trade. Can you see this trade that delivered about the 1 to 11? This was the after of the trade. This was the before of the trade, all right? Which was a very, very simple trade for me. Look at it. I took it as a 1 to 2 risk reward, but then it went as far as giving us a 1 to 11. Now, take a look at this entry. I will explain why I took that entry. So this is GBP JPY 15 minutes time frame. So let's go down to the GBP JPY and the 15 minutes time frame. This was the trade here. So we broke past some support and resistance level, and there was already exhaustion coming into the market in this retracement. And there was a point of interest I was also looking out for. And my daily bias was bullish. So immediately that daily bias presented, I was already telling myself that I am waiting for momentum to kick in based on some other factors, which I cannot now start discussing because of the want of time. But look at where the entry presented and granted me. Bias was bullish. We've broken back into this level. That is also a support and resistance, okay? So price broke past it and broke back into it, telling us that, okay, this is a good signal that these guys will be aiming for at least this target for the next target, okay? And what did price present here that resulted to that entry? Look at the entry right there. No, I'm sorry, just a moment. This was the entry. Again, let me post it so you can see it here. You can see it. This was exactly that same chart analysis. So this was the entry. What do you think price formed here that made me take it? This is just a pure evening star candle concept. First candle, power candle. Third candle, an indecision candle. Middle candle, an indecision candle. The third candle closed way below 50% of the first candle, or way above it, All right. Entry, I took my entry right at the close of that candle. SL will always be at the third candle lows. And I took my TP at a 1 to 2 risk reward. Only for me to come back and realize that. And now, why did I take it at a 1 to 2 risk reward? Because we were still in a very, very serious downtrend. I didn't know if this move is going to lead us to, the new momentum that will be created. So I just said, let me quickly take my target off from here and wait for more confirmation, because ideally I should have waited for the 4 hours to give me that momentum confirmation before I engage in the trade, which now came around here. Can you see how they gave us that retest from here to now give us this push to the upside. So ideally, I was just saying, let me just take this small trade here in case of maybe a retracement will come out, or in case of maybe a retracement is going to come back into this market. I don't know. But let me just quickly take my 1 to 2. Ideally, I should have also looked at this next level as a target, which eventually went to give us a whooping 1 to 4.8 risks to reward. And price also went ahead for the next cycle, giving us a total of about a 1 to 10 risks to reward trade. As simple as that. So once directional bias is gotten, you've been able to properly align it with your key levels, which is just this your daily range cycle levels, and this evidence present in this buying case now with the morning star candle. You take your entry at the close of the formation of that morning star candle, SL below the third candle, and that is your ride all the way to the upside. Okay? Easy target is always going to be a 1 to 2. You are always assured that once everything is alignment, you should get a 1 to 2 risk reward. If you don't get a 1 to 2 risk reward, you will definitely get a 1 to 3. That is beyond the 1 to 2 risk reward. You will definitely get a 1 to 3 risk reward. If you now have the heart to hold more than that, you can hold more than that. But me, I prefer to typically terminate my trade at 1 to 3 risks to reward. Because even if they give me this 1 to 3, maybe I exit a 1 to 3 here, and price comes here to give me another entry here, I know I can also easily get another 1 to 2. Look at this now. All right. Price broke into these levels or broke into these zones, and immediately they broke into these zones. I'm rest assured that, oh, our next target is going to be these zones. Where can I wait for price? I can wait for price at the 50% of this particular range and see if I can participate in any other trade there. Now, can you see the 50% of that trade? What presented here? Is this not an engulfing candle, a bullish engulfing candle? Look at this bullish engulfing candle that presented here. I could have entered right at the close of that engulfing candle, SL at the lows, and easy target is going to be these highs. But then if I'm targeting these highs, it's a 1 to 3 risks to reward. But look at where 1 to 2 presented. Can you see exactly a 1 to 2 risks to reward trade before we even got this retracement that came back up? So you see, this one was another very easy money trade for me. Engulfing candle at 50%, quick 1 to 2 risks to reward. You're in and out as though you were never there. And that is just how you would have been able to utilize that particular trading opportunity. So this is how I trade. Okay? Tomorrow we're going to be looking at putting it all together. I don't know if you're with me. I know that a little things now, I need to end it here before the law of diminishing return begins to happen. The things you are understanding will now begin to fall out one after the other. Don't worry, when you watch this video over and over again, clarity will come, all right? And by tomorrow, when we now put it all together, monthly daily range, building a bias on the daily time frame, 4 hours points of interest with our quarter points confluence, daily range cycles with our candlestick pattern entries, you will see how we use this trade. 1 to 2 risks reward is always usually very sure. I call them my easy money trade. And then you can easily get a 1 to 2, 3 risks reward. And mind you, yes, I take losses too. There is no trade strategy without a losing streak or a losing period. So yes, I also take losses. And risk management is just what is keeping us in place, okay? So having said that, thank you all for hopping on today's call. If you have any question, please kindly indicate in the chat box. Let's address that quickly. We can just take only maybe max 2 questions and that will be it. But if you have no questions, thank you all for hopping on the call. It's past time already. Okay, we've short past time already. I need to allow you rest for those of you going to work tomorrow. Tomorrow is our grand finale. Don't miss it. Don't miss it for anything. All right. We'll be rounding and putting it all together. All right. I will mute you, John. So we'll be rounding it up and putting every single thing together so you can get clarity on how the system works in a very concise way now. All right. You know, we've been taking it step by step, but now I need to put it all together for you guys for clarity and for understanding. And then by Saturday night, all the videos will be released to you on YouTube. I'll post it in my Telegram and my YouTube channel. So please, you can check me out on YouTube and subscribe. So once it comes, although when I upload it, I will let you know also. Okay. So by Saturday, it will already be in the YouTube channel. You just go there and watch as much as you want. Okay, to refresh your memory, and that will be it. So tomorrow I will see you guys. Let's take the questions from John. You can unmute yourself. I've asked you, I've given you permission to unmute. So unmute yourself and then let's talk about it.
All right. Thank you very much, sir. Good evening.
Yeah, good evening, brother.
All right. My question is, I tried to practice what I learned yesterday, and yeah, I love what I saw. I practiced it on gold.
Mm,
Now, the question is, if I want to draw this particular key level now,
mm.
this daily range cycle level, won't the chart be messy? Like,
Okay, yeah,
I
yeah,
want to have plenty lines.
yeah. Okay, see it now. Let me answer that.
So
Very,
in that case, okay.
let me answer that. Sorry. This is it. Look at it now. If you see my own chart, in order for me to avoid those messy charts, look at this. I have my quarter point levels here plotted on this. Now, if you come look at GBP JPY up here, there are plenty brokers with GBP JPY. All right. So I use
Okay.
Oanda for my quarter point levels. I use FXCM for my daily range cycle levels, and I keep a plain chart with forex.com. So my chart don't be messy. So if you come to here, you will see GBP JPY, GBP JPY, GBP JPY, USD JPY, USD JPY, USD JPY. So for this GBP JPY, if you look here on the daily time frame now, you see that is where I plotted all my quarter point levels only. Nothing, I don't use this chart for any other thing aside quarter point. When it now comes to my daily range cycle, I use FXCM. That is the only thing you will find on this particular one. And then I have a plain chart here for proper analysis. So I do my analysis here first before I now go to the quarter points. Like I said, I'll do the putting it all together tomorrow. So I come from the monthly time frame to the daily time frame. I want a plain chart for my proper analysis for clarity's sake. Now, once I do the analysis, I now confirm from my quarter point level, and then to now begin my entries, I now open my daily range cycles to begin to find my entries. And if you've noticed, sometimes also what I do is when I've also marked out my entries, okay, once I've identified my entries and my place, if I want to share the chart, I will come to my plain chart and just mark it out. For example, now, those of you in the call, we know why I'm taking the trade I'm taking. Okay? But then if I come here, now this is exactly, if I want to share it on Twitter or maybe any other social media page, I will just post something like this and allow you to go and argue with your forefathers on why did he enter the trade or why did he not enter the trade. Somebody will come out and start saying he entered because of this other block. Is your business. You're correct. Or he entered because of imbalance. Is your own business too. You're correct. So anything you want to say that is the reason why he's entered, you can argue with yourself on that. Me, I know why I entered. That information is not given. At least I'm not drawing lines to let you know that this is where I'm entering from or this is not where I'm entering from. That information is specifically left and made for my community members. I give them the breakdown. This is why I'm entering. This is where I'm looking to exit. I will now also leave you to go and argue with your ancestors why he exited there. You might say, okay, you exited because of 1, 2, 3, or you exited because of liquidity here. I don't even know what that is. I know what liquidity is, but yes, I wasn't looking at liquidity when doing the analysis, okay? So that is how I do my own thing. It is because of this bootcamp now. That is why you can see me share the trade I shared here, and then the trade signals that I shared, or the trade entry, you saw it with all these lines. Ideally, if I want to do it, I will not send it with even the one with these lines. This one is meant for me and me alone. Okay, so you can do yours that way too. So if it is gold you trade, in this particular case, XAU USD, all right, this is it here. Don't mind me, please. So look at gold has plenty brokers. Use Oanda for your quarter points. Use FXCM for your daily range cycles, and then just keep one plain chart there for easy analysis or any other thing that you want to use the chart to do for yourself. And you can just group them like this, just the way I grouped mine. Okay, that will make things easier. So I don't know if I answered your question. I think I've muted you, but so you can just indicate in the chat box if that got if that is clear enough for you. And I don't know anybody else with any questions. Does any other person have any other questions? So we'll attend to that and then we'll call it a day. John, I don't know, did I answer your question? Please kindly confirm. All right. All right. All right. So any other question? None. So with the absence of any other question, this is it, guys. Welcome to my daily range cycle concept. If I should call it, in short, what I call my concept is the QMFC concept, okay, or the QMFC model. I show the QMFC model. The QMFC model simply means that is Q, M, F, C have to do with quarter points, momentum, my fibs. Now, under these fibs, under quarter points, there is my DROC concept there also. Momentum guides me to know who is in charge. Then I use my fibs, like the fibs you saw me plotted here now, and then my candlestick patterns. All right, so I trade the QMFC models. That's just the meaning of it. And with time, you'll get to master it. With time, you'll get to understand it. It is easy. Whether you trade prop firms or you trade personal accounts, it can be very, very useful to you. Once you understand it, it can help you with timing your entries, getting good entries, getting very good exits. You're in and out of the market like you were never there. Above all, risk management. Time has failed us to not talk about risk management and psychology properly, but I will definitely hint something about that because you guys only have my system. I can give you my trading plan and you will not see attain profitability because you don't think the way I think. My approach to risk, you need to understand it. My approach to how I handle each of all these things, or even how I handle losses. And the reason, in short, including my risk sizing, you need to understand all those things. It's a broad stuff. And I trust God that by tomorrow, we'll be able to do justice to all of them so you can have them free of charge, okay? So that will bring us to the end of today. Thank you, everybody, for making our time to be here. I hope you've got one or two value. And once the video is out, you can study. And tomorrow will be our grand finale, putting it all together, risk management and psychology. And that will be the end of this bootcamp session for the first half of the year. The next bootcamp will be by the next half of the year, okay? So cheers and God bless. Good night, guys.